Welcome back to the Brent Bruce Daily. Today is February the 9th, 2023. It is currently 2:45 p.m. Central Time. Mortgage-backed securities continue to slide after the employment number that came out on Friday, which, I have to say was an excellent employment number, but not so good for home loan interest rates in the general bond market. We're going to take a look at that. We're going to take a look and see where we are on our home loan interest rates. We're also going to switch over and take a look at our government loans, our FHA, USDA, VA, all of that we're going to talk about briefly. And I want to show you why it's important to make sure that you're paying attention to the fact that banks price their business differently. And that's one of the advantages of being a broker is it's not just one bank that I'm working with. This is not either Bank of America or some of the other large mortgage bankers that have their one product. We're able to look at many banks, and interestingly enough, different interest rates are going to be better suited for different banks. So I'll take a quick minute and show you what I'm talking about when it comes to that. So looking at the bond market here, overall, we're down 36 basis points on the mortgage-backed security that we watch each day. Not good news. If you take a look down here at the charts, this was the Thursday before the employment number. This is the day of the employment number last Friday. From the top up here, we're down about 120 basis points over this last few days. Now it's been just about a week. So we do have now a lot of room that, that we have to fight back and regain, breaking through all these ceilings of resistance to get back to where we were. And unfortunately, this is due to a report that continues to be suspect by basically anyone that pays attention to these numbers, because it just doesn't seem to make sense. And at the same time, many of the individual line items in the report were revised. The calculation to get to those numbers was revised very recently. So now we can't even compare data that is truly equivalent. So we're not able to say, hey, for February and for March, from February, January, December, November going backwards, we can't really compare those numbers. And I actually heard that the Bureau of Labor Statistics actually made that comment themselves, that this new report would not be something that could easily be equated to previous reports because the changes were so dramatic in how they calculate these figures. Unfortunately, it's not doing well for the overall mortgage-backed security market. So here we are, as we mentioned, we are now in this range here with this new Fibonacci level as our floor of support and our 50-day and 25-day moving averages as our ceilings of resistance that we need to get through. We are up 8 basis points on the 10-year Treasury. Also not good. Look at us creeping closer to that 4.0% number that we do not want to be at. Let's take a look and see where we're at on our Brent Bruce daily scenarios here. And then we'll take a look at our FHA, VA, USDA products as well. So currently we are now at 6.49%. Now remember, we were celebrating 5.875% just last Wednesday. And now we are looking at 6.49%. So more than a half of a percent increase after that report came out. A little bit of a credit here of $544. Now, quickly, let me show you why looking closely at the banks makes a difference. So if I open up this lender here, 11 Mortgage, is one of our wholesale lenders that we use as a broker. We have access to these. Many of the mortgage banks do not. It's something that only brokers have access to. So 6.49% is given a credit of $544, but take a look and see here if we wanted to get to 5.99, it's costing just about a point, not a big deal. 6.25%, a little bit over a half of a point. So let's take a look at some of these other banks. If we take a look at, let's say, First Community Mortgage, down a little bit further. They also are offering 6.5, basically the same as 6.49% for a small credit of $299. To get to that 5.99, basically 6.0, again, very, very close. You see, they're only at 0.857. So it's a little bit cheaper. And for a half of a point, 0.491, we're getting 6.125. The bank we just looked at, again, that's a half of a point is getting us 6.125. Let's go back up here to 11 Mortgage. And a half of a point, more than a half of a point, is getting us to 6.25. So my point is that for more cost, you're getting a worse rate than with a different bank, even though 11 Mortgage is the best priced for a no-point loan. So you see, we have to price out this business with multiple banks. So if someone says, I want a 6.25%, we're going to price that out with multiple banks. Some brokers have 50, 60, 80 banks that they'll price this business against. In general, they're going to be fairly similar, but definitely, as you can see there, that made sense. In one case, it made sense to use a bank which was the fourth best priced on a no point loan, was actually the best priced on a half of a point buy down loan. So you want to pay attention to that. All right, so let's take a look over here at what's going on with our FHA. Go back to our scenarios, and let's pull up our FHA products since we have just a moment here to go through another item. And we are sitting at 5.625% with no points, again with 11 mortgage. Look at First Community is a little bit closer here. Home Point is moving up. They used to be one of the best priced, but for a while they've kind of slipped back. If you pay a point right now, just under a point, you're at 5.375 with 11 mortgage. Let's open up First Community. And again, 5.625 is just a little bit less than, I'm a little bit of a credit here at 5.625. And if you pay a point, you're getting closer to that 5.125 number. So I would probably be looking at going with First Community in this case. And of course, I'd go through all of my other banks to see which was the best one to go with. So just wanted to show you how we really do shop these loans. We really do look at the scenarios to try to find the best exact scenario. Does it make more sense to put 1 more % down towards the down payment? Or does it make more sense to put 1% towards closing costs and buy the interest rate down another 1 point? We look at all those scenarios when you're really doing mortgage advising, which is what we do here. Give me a call if you have any questions. I'd love to talk. Getting more and more comments about how people are appreciating this information. If you appreciate the information, please do make sure that you go to the YouTube page and like this video and subscribe to the channel and let other people know that this is available, people that can use this information. If you have any questions, let me know. Thank you again. I'll talk to you tomorrow.